Okay, so what is going on in the crypto market right now? I mean, it feels like everything is happening all at once. You've got greed, you've got fear, you have huge institutions piling in, while everyday investors are dodging new scams. And on top of all that, you have these big political moves that could just change everything overnight. So, in this explainer, we're going to try to connect some of these dots and figure out what's really driving the market on a day like today. So, let's start with that big question: greed, fear, or just total confusion? I mean, what is the market really feeling right now? If you try and get a straight answer, you just hit this wall of conflicting signals. Some signs are screaming greed, others are flashing fear, and a lot of it just feels like plain old confusion. So let's dive in and try to unpack these mixed signals first. All right, section 1, the market's mixed signals. We're going to look at all the contradictory data points that are defining the mood right now. It's a real classic tug of war, and you can see it happening in real time. And here is the heart of the problem, right? You've got two totally different stories being told at the same time. On one hand, you have analysts warning about market fatigue. They're saying, active traders are just getting worn out, and we might be heading for a slump. But then, on the other hand, you look at something like the Fear and Greed Index, and it's flashing greed, which suggests the overall mood is actually turning pretty bullish. So, are we tired, or are we excited? The market data seems to be saying, well, both. And this is where you can really see that split personality. Look at the Fear and Greed Index. It's jumped up to 60, putting it squarely in greed territory. But then you look at the altcoin season index, and it's way down at just 36. So what does that tell us? It suggests that, yeah, there's optimism, but it's super concentrated, probably in Bitcoin. Meanwhile, everyone's still pretty cautious about the wider altcoin market. It's kind of like a yellow light, not a full-on green go-for-it signal. And this quote from FX Pro's chief analyst just hits the nail on the head. He says, the downturn is discouraging the most active traders. Bitcoin is experiencing accumulated fatigue. That word, fatigue, is perfect. Even with all this greed in the air, the price action itself is just grinding people down. The market's kind of just spinning its wheels, looking for a clear direction, but so far, not really finding it. So, while the everyday traders might be feeling that fatigue, there's another group that seems to be completely ignoring all this short-term noise. And that's the institutions. Big money is making some really big moves. And that's the second major theme we're seeing today. Now, at first glance, the story with institutions looks pretty simple, right? Over $91 million flowed into Bitcoin ETFs. Bullish! But when you dig into the details, it gets way more interesting. BlackRock's fund, it pulled in nearly half of that all by itself. But at the same time, other big funds like ARKs actually saw millions of dollars flowing out. This shows it's not some unified institutional wave crashing into crypto. It's a bunch of different, powerful players all making their own very different bets. And for these big institutions to feel comfortable making those bets, they have to trust the platforms they're using. That's why reports like this one are so important. What you're seeing here is Binance showing that its reserves for major coins like Bitcoin and Ether are over 100% backed. This is the kind of verifiable on-chain proof, that transparency, that's absolutely crucial for building the confidence needed to bring even more institutional money into this space. And that growing confidence isn't just happening inside the world of finance. We're seeing this really fascinating trend where companies from totally different industries are starting to use Bitcoin as a treasury asset. I mean, a gold miner in the UK, a fashion brand in Japan, and even a company using a SPAC merger to go all in on a Bitcoin strategy. This could be the start of a huge shift in how corporations everywhere think about their balance sheets. And this quote from Pierre Rochard at Riot Platforms, wow, it perfectly captures just how radical this mindset shift is. He's saying, don't spend more than $100 on an engagement ring, buy Bitcoin, and plan for your family's future. Think about that. He's suggesting swapping an engagement ring, this incredibly powerful symbol of tradition and value, for Bitcoin. This isn't just about investing anymore. It's about fundamentally redefining what planning for the future even means to people. Okay, so all these huge, big money moves and these major cultural shifts, they all have a direct impact on you, the individual user. For the retail investor, this whole landscape is basically a battleground. On one side, you've got these incredible opportunities, and on the other, some really devastating risks. Let's talk about the opportunity side first. Active users can find some really tangible rewards. Platforms are constantly running promotions like airdrops for new tokens, kind of like the ones you see here. But this also shows you how complex it can be. The rewards, the rules, the requirements, they're always changing. To actually succeed here, you have to pay constant attention to the details. You really, really have to read the fine print. And of course, on the flip side of all that opportunity is danger. While some people are out there claiming airdrops, others are falling victim to these increasingly sophisticated and nasty scams. This is a huge threat, so we need to break down exactly how it works. Okay, so here's the anatomy of a particularly awful scam that's going around. It starts with a promo on an old hijacked YouTube account, which makes it look totally legit. The bait is a trading bot that promises easy profits. They tell you to deploy a smart contract, but here's the trap. Hidden inside that code is the attacker's wallet address. The second you put any money into your wallet to use the bot, that malicious code just drains it. It's simple, it's brutal, and it's devastatingly effective. And the financial damage is just staggering. We're talking about more than $939,000, nearly $1 million, drained from victims by just one set of wallets linked to a single scammer. And that's just one operation that we know about. This isn't some petty theft. This is a highly profitable criminal enterprise. So, how do you stay safe out there? The rules are actually pretty simple, but they are absolutely vital. First, never, ever deploy code you find on social media. Just don't do it. Second, be automatically skeptical of anything that promises guaranteed profits. That's a huge red flag. And finally, always verify information on your own from multiple trusted sources. These steps, they aren't just suggestions. They are your main line of defense. All right, for our last section, we have to zoom out from the market itself and look at the massive external forces that are at play. Because, whether we like it or not, decisions being made in Washington, D.C. are sending some powerful shockwaves through the entire crypto world. Take a look at this. A single post about putting new tariffs on that can inject a massive amount of uncertainty into the entire global economy. And for markets, uncertainty is like poison. It makes investors flee from anything they see as a risk-on asset and run for safety. And right now, for better or worse, crypto is still seen by a lot of people as the ultimate risk-on asset. That makes it incredibly sensitive to these kinds of political bombshells. And this matters a whole lot. The next chair of the Federal Reserve is going to have enormous power over financial regulation in the U.S. So when it's announced that the final candidates are all from Wall Street, that sends a really powerful signal. It suggests that the future of crypto regulation might be shaped by the very financial system that crypto was, in many ways, built to challenge. And all of this, it leaves us with the central question for crypto today, doesn't it? You have this massive collision of worlds. You've got the immense power of big money and big government on one side. And on the other, you have the decentralized, borderless, and often chaotic energy of individual users and builders. As these two forces collide, who is ultimately going to win this tug of war and shape the future of crypto? The answer to that? Well, that's going to define everything.